So, why aren't alarm bells ringing? Well, we are joined now by the CEO of Euro-Pacific Capital, Peter Schiff. Peter, thanks very much for spending time with us here on America's Forum.
Hey, thanks for inviting me to spend some time with you.
We're glad to have you. And Peter, all the warning signs seem to be here. Is there a recession looming?
Well, I think we're probably already in one. I think we've been in one the entire period of the recovery. You know, they call it a jobless recovery, but I think the reason it's jobless is because there is no real recovery. The recovery is illusion created by the statisticians. You know, when the government underreports inflation, it makes it look like the economy is getting bigger, but really we're measuring the economy with dollars that are getting smaller.
And I have the skepticism, Peter, that the folks running the Bureau of Labor Statistics have taken their cues from the way they count votes in Chicago, Cook County, Illinois, that may also lead to problems. But let me turn to another subject here, Peter, and that's the severe weather. That certainly cannot help an already bleak economic picture.
Well, you know, I think the effects of the weather are being exaggerated very conveniently. I think that nobody wants to acknowledge that the economy is as weak as it is, so they're making excuses for the bad numbers by blaming it on the weather. But there's very little evidence that the weather actually is a significant factor. In fact, if you look at a lot of the data, for example, if you look at the auto sales, they blame the weak auto sales on the weather, even though Ferrari and Mercedes and BMW had record sales during January and February. So that doesn't make any sense. People aren't buying Chevrolets, but Ferraris are selling like hotcakes. If you look at the real estate data, the real estate data is actually weakest in the parts of the country that have been the warmest. So, you know, even online sales, you know, that you would expect that bad weather would help online sales. Yet they're saying that the bad weather hurt online sales. In fact, a lot of people are probably more likely to spend extra money when the weather is bad. So I think it's just a convenient excuse. But, you know, when the weather warms up, the economic data will not. And so they're going to have to come up with another excuse why the data is going to be bad in the springtime.
Peter, go ahead, John.
Peter, in the past, the previous couple of years, we've seen more job growth in the beginning of the year, and then it's tapered off towards the end of the year. But we haven't seen the same type of job growth at the beginning of this year as opposed to years last. Do you think that's going to continue, but just be worse? There'll be even fewer jobs created as we move on through the year here?
I think so. In fact, if you look at 2013, the economy grew, according to the government, I think 1.9% on the year. That was substantially less than I think the 2.5% for 2012. So the phony recovery is already fading away, and I think the trajectory is down, so the numbers are going to get worse. And, you know, when you actually look at the numbers, look beneath the headlines, the jobs that we did create were lousy jobs. They're low-paying jobs. A lot of them are part-time or temporary jobs. We're losing higher-paying jobs and replacing them with lower-paying jobs. That's why the average American is seeing a decline in their standard of living because their paycheck is going down, but their cost of living is going up.
Peter, I want to amplify something you touched on earlier, and that is the relationship of housing starts and auto sales to the economy. In past years, those have been really the signals showing us where the economy is headed. And you're saying that really the downward slide continues in those key sectors. What else should we keep our eye on that leads to more concern about an ongoing recession?
Well, you know, I think the last time the Fed was able to create some artificial spending in the economy based on inflating asset bubbles, you had more participants. So I think that now you've got a stock market bubble and a real estate bubble, but not as many Americans are benefiting from these bubbles as benefited temporarily anyway from the bubbles in the 1990s and in the first decade of this century. So you're not getting that kind of temporary artificial boost to consumption that we got before. I mean, you're seeing it for luxury goods, but not for anything else. But I think what's really going to, you know, kind of put the final nail in the coffin is going to be when you really see a bigger drop in the value of the dollar, which has been weakening. And as the dollar begins to succumb to all this money printing, you're going to see bigger increases in consumer prices. That's for food, for energy. And that's going to make it so much more difficult for Americans who are struggling to get by. They're not going to be able to buy new cars or new houses when everything they earn is going to go just to putting food on the table.
Let's turn internationally, and apparently this downturn is sweeping up other nations, specifically China. I understand Chinese exports have fallen dramatically, not since mid-2009 when the international financial markets were still reeling from our U.S. financial crisis have they been this low. So with China's situation now, how will that affect global markets?
Well, China's situation is not nearly as bad. And, you know, the fact that China's exports are down reflects the problems in countries like America where they've been exporting to. I think, see, what China needs to do is allow their own currency to rise in value so that their own citizens can consume the products that they're producing. And so that's a very easy solution to the Chinese problem, and it's going to benefit the Chinese consumers. But when they figure this out, it's just going to make things that much more difficult here in America, because when the Chinese start consuming their own products, that means that Americans can't consume those products because we won't be able to afford them.
Yeah, and they won't need us anymore, or our Walmarts either, to distribute those items. Peter Schiff, CEO of Euro Pacific Capital. As always, it's great to talk with you. We'll have you back very soon.
Thank you.
Thanks very much, Peter. Lots more coming up, and as always, you can weigh in with us via social media. Tweet us your comments at Newsmax TV, #America's Forum. Visit us at facebook.com/Newsmax, or you can email us. The address connect@newsmaxtv.com. Don't go away. There's more on America's Forum.